Uh, Good. Well, welcome to Pace University and the Business School of Business, and to our 6th annual Pace Business Plan Competition. Co-sponsored with the obviously Entrepreneurship here at Leuven, and the MIT Enterprise Forum and the Wilson Center for Social Entrepreneurship. But none of this would have happened. None of this would have started had it not been for Bruce Bockenheimer. To love him. You know fully that he is probably one of the most engaged individuals that I have ever met. In any given period of time, he has about 6 projects in the works, a lot of which are near completion, and another 4 or 5 about to come and happen. So, Bruce, you are really the entrepreneur, the definition of the entrepreneur here at Pace, and we're very happy for them. I'm the Dean of Leuven. I'm not going to take much of your time here, except again to welcome you and to actually those of you who are competing in the business plan. I think that first of all, congratulations on being in the finals. And I think there are 3 of you that will come up here and speak for about 3 or 4 minutes. One of you will get $1,000. That's $1,000 bucks. That's not too bad. And then I think it's 500 and 250. I came to Pace about 4 years ago from the business world, and somewhat an entrepreneurship background, but most of it was very fortunately inside of companies. It's nice to be an entrepreneur when you have somebody who has deep pockets and doesn't care too much about how you spend the money. I was the founding president of Toys R Us International. The company was very successful when they asked me to come in and take it outside the U.S. And for those of you who have written business plans, I need to tell you, I never once wrote a business plan for that company. But I think that if I had, we probably wouldn't have gone anywhere. Because the very first thing my board of directors would have asked for is, show us how this has been done before. And obviously, a good business plan has never been done before. That's why it's there. That's why it goes on. So I would have been asked to bring in McKinsey, Boston Consulting Group, and who else? Alphabet soup of consultants at very expensive rates. And the first thing they would have done is they would have gone outside the United States and they said, "Is there anywhere in the world where there are toy stores that are an acre in size?" And the answer would have been no. Most of them are 2,000 or 3,000 square feet at best. So they would have come back and they say, "Why don't you try 5,000 square feet and see if it works?" Well, it's not 45,000 square feet. The net of all this is that business plans are important, they're essential, but they should not be a corset which guides you. And more importantly of all, what's really required is a lot of passion. And ultimately, a business plan translates to one thing, and that's the management of cash flow. So there is such a thing as a 12, or what's known actually, if you get in trouble, it's known as a 13-week cash flow forecast. And every 13th week, you have this rolling cash flow. It's a good discipline to get into, to manage your cash or your investors' cash. So with that, I'm going to be looking and see whether you've got cashable assets here that I can work on. But anyway, congratulations, welcome to the finalists, and Bruce, I'll turn it over to you. Thank you very much for asking me.
Thank you. Thanks again, Joe. Joe's been very, very supportive of these efforts, and I appreciate it. So welcome to Pace University and to the 6th annual Pace Business Plan Competition. This year's theme is From Plan to Reality, what it really takes to start a business. So it's not just here to see the 3 finalists, which will be exciting, and they'll give their pitch, and we'll get some feedback on that, so it'll be kind of a living case, but it'll also offer some very practical experience to entrepreneurs or would-be entrepreneurs in the audience. So again, my name's Bruce Bockenheimer. I'm a clinical professor of management at Pace, the director of entrepreneurship at Leuven, a faculty fellow at the Wilson Center for Social Entrepreneurship, and also the chair of the MIT Enterprise Forum. Pace has a long entrepreneurship history. Its program actually started back in the formal program started in 1979. at the time there was only about 24 colleges and universities in the world that had entrepreneurship programs or even entrepreneurship classes, and today there's about 2,400. So this year we're celebrating our 30th anniversary. The MIT Enterprise Forum also has a very long entrepreneurship history. It was started in 1971 and it has grown to 25 chapters around the globe, headquartered at MIT's campus in Cambridge, Massachusetts. In that role, and I guess I'm wearing two hats today, but the MIT, some upcoming events are investing in aerospace entrepreneurship on April 22nd, exit strategies at a crossroad on April 28th, and we can all learn a thing or two from women on May 14th. If you're interested in these events, you could just go to the website. It's in the program, but mitef-nyc.org. For tonight's event, I'd like to thank first our panelists. They're not just panelists, they're also judges. They had to read a bunch of 30 to 40 page business plan and select tonight's winner. And nobody yet knows who the first, second, and third place winners are, but we'll announce that shortly. But they are Mumtaz Alvi, the founder of Alvi and Alliance, counselors at law. Somak, Chattopadhyay, the vice president at Greenhill Silicon Valley Venture Partners, who's also on the board of the MIT Enterprise Forum of New York City. Michael Gotchman, who's the founder of the Gotchman Group, a real estate firm. And Sabrina Horn, the founder, president, and CEO of the Horn Group. I'd also like to congratulate the three student finalist teams. They are Michael Bonavita for Kone Chibo, Katie Osan for Between Courses, and Deval Desai, Saurabh Nandwani, and Rohit Fature for Students Globe. I'd also just briefly like to thank the sponsors of the Enterprise Forum, which is the IBM Corporation, the New York City Bioscience Initiative, part of the New York City Economic Development Corp, and our sponsoring law firms, Goodwin, Proctor, and Otterberg. And I'd also like to thank, and I'm not sure if he's here, but even if he's not, Nick Schiavo, are you here? Nick is an alum that's been very engaged in actually his contributions as an alumni, and he doesn't know I was going to say this and he's not here, but has been very generous and made tonight's event possible. So what the event, very quickly, the agenda for tonight is the three finalists will give a quick pitch of their business plan, just 3 minutes, and then the judges will briefly introduce themselves and give some general comments on those plans. Again, it'll act as like a living case. And then I, as a moderator, will ask some questions that will be applicable broadly, not just to the three companies, on what it really takes to go from a business plan to a business. So the order of the presenters will be alphabetical by the name. So first will be Between Courses, and then Kone Chibo, and then Student Globe. So without further ado, I will introduce, and these are all PACE MBA students, and I've had the fortune of having them all in my class. But first, Katie Osan.
Every restaurant begins with a dream. Inspired by the owner's love of food and passion for entertaining, we all know that sometimes dreams can get lost in the big picture. Compromises, budgets, and the overall bottom line can get in the way, and the end result is a mediocre restaurant with typical food, poor tasting wine, and less than desirable service. We've all had those experiences of dining out. Well, I'm Katie Osan, and my company Between Courses can help save these restaurants. We're specifically targeting those restaurants that are failing to provide customers with the experiences we all look for when going out to eat. Between Courses provides a diverse package of services for a range of clientele. There's our temperature gauge, which is a series of market research techniques to provide an analysis of the overall climate with the restaurant's patrons, their customers, their employees, and their competitors. Next, we have Marketing Guru, which is geared towards a restaurant that needs to create more business and buzz about their eatery. And our prized offering is the gold standard, which involves a thorough marketing research plan, food and wine consultations, management overview, marketing analyses and recommendations, and options to engage a full restructure of the restaurant's layout. Additionally, we have market research services provided 24/7 a la carte on our website, betweencourses.com. Each day, 133 million people will be food service patrons in the United States. Although the overall industry is over $550 billion, there is a high percentage of restaurants that fail each year. And an even more significant portion of these restaurants are failing to provide a quality experience for their customers. Between Courses aims to capture the markets of Fairfield and Westchester counties. Our competition approaches this problem as consultants. They are trying to apply identical strategies across various restaurants in different markets, and this is a problem. In contrast, Between Courses is more committed to their clients than the competition, offering specialized solutions and guidance to each and every restaurant. Our marketing plan involves a thorough interactive website with proven success stories, attendance at trade shows, advertisements geared towards restaurants, and complimentary comment card surveys and evaluations to attract new clients. As founder of the company, I have a background in analytical sciences and marketing research. I'm also graduating with my MBA in entrepreneurship. I have 5 years of experience in the restaurants, and I dine out all of the time. Our Director of Operations and Wine Manager is John Patrick Osan. He holds a degree in Hospitality and Tourism Management. He is a wine sommelier and restaurant manager in Destin, Florida, and he has 10 years of experience in restaurants and hotels. Our Director of Food and Menu Options is Jason Wald. He is an executive chef and a graduate of the French Culinary Institute, and he has 5 years of experience in the business. Our monthly break-even point is estimated around 24 units, which is roughly $100,000 a month. And the great news is we anticipate reaching this level of sales by our 5th month of operations. We're currently asking for $350,000 to get the business off of the ground, and this is in return for a 35% share of the company. This will allow for proper resources to establish a strong brand, market effectively to our target market, and build an interactive website. I'd like to thank you for your time tonight, and I hope you're as excited as I am about making Between Courses a reality.
Second presentation will be Michael Bonavita Conechibo. If I said that correctly. By the way, Nick Schiavo, who I mentioned, just came in. So Nick, if you could raise your hand, and thank you to Nick for all the support.
In today's fast food environment, there exist same boring options. 40 or 50 years ago, if you asked people what a Big Mac or a Whopper or even a sandwich wrap was, they wouldn't know what it is, but yet today it's a household name. I present to you Conchiba. Conchiba plans, and I believe in the future, to be the next household name. It will combat oversaturation via differentiation, provide a fun, delicious, healthy fast food experience in an artisanal bread cone, and ultimately create a new category of food. Conchibo is a rustic artisanal bread cone filled with gourmet, eclectic fillings. It's fast food, but yet it's delicious and healthy, and it's unprocessed. Conchibo has a double meaning. In Italian, con means with, and cibo means food. So with food, or food in a cone. We believe that the bread recipe is a strength. It has old world roots, Southern Italian recipe. It has roots from the Etruscans, the Greek civilizations. These are cultures that have the highest standards in baking. Also, the novelty is a strength. No one's ever thought of taking a sealed bread cone and filling it with an eclectic gourmet filling. We also believe that a location will capitalize on our target market, which is health-conscious, food-savvy working professionals. Competitors are high-end, Panera, Cosi, Witchcraft, Pasha, and Pret a Manger. Retail distribution strategy is starting small with a menu of 6 to 8 items, which will feature the gourmet fillings in the artisanal bread cone, also have desserts, drinks, wine, and coffee. And we feel this is a way to not dilute the brand or the idea. And wine and beer is a perfect way to pair or in the future have cross promotions. And the marketing is going to be resourceful yet effective. And it's all aimed at creating a sense of craving, guerrilla marketing, dynamic website. And to not duplicate the idea and to make it sustainable, I believe it's important to have a conchibo experience, featuring the scent and aroma of the bread and possibly even the baking of the bread cones, which will lure customers in and build strong brand. Currently, we have 100,000 ready to go. We're looking for 250,000 prior to launch. First year, conservatively, 850,000. The investor will look to get his money and make a profit between year 2.5 to 3. And after 3 years, the goal is to put money back in and launch a second location. We're also offering percentage of ownership in future franchises. We have a talented team of individuals that are vested in the business and prepared to live and breathe Conchibo. And they have experience in marketing, restaurants, web design, hotel restaurant management, legal, and so on and so forth. Short-term plan, 1 to 3 year plan, start small, be ambitious, accomplish goal in phases, and ultimately we like to grow, expand, and franchise. Thank you very much.
Good. Thank you, Michael. And finally, Student Club, which Rohit will, as the CEO of the firm, will present.
Good evening, everyone. I'm here to talk about Students Globe. Let me pose a question. Suppose you were 18, just weeks away from flying halfway around the world to begin college in a place you didn't know and where you had no friends. What would your needs be? We know that feeling. That's why we created Students Globe, a business we believe we can generate $2 million in revenue, scale internationally, and be highly profitable by year 3. Students Globe will be an international student source of immediately necessary resources like cell phone, bank account, credit card, ground transportation, retail discounts, air ticketing, and insurance. All the primary services that an international student needs, all in one place, online, and all at money-saving prices. All this just for a one-time fee of $20. From our experience and our survey of 200 international students, we know the transition would have been much more easier if we could have arranged for these services before we left. And this is where Student Globe brings in value. And the market potential is huge. Every year, more than 133,000 Indian students come to US. 90% of these students take help of educational consultants to prepare for college. We will reach these students with the help of these educational consultants. But there is a gap. There is a gap between being admitted and arranging all the services required for a smooth transition. Unlike our competition, which is fragmented, Students Globe will be online, easily available, and will help them save money. In our 3rd year of operation, we would expand to China, Korea, and Japan, which, along with India, contribute more than 45% of international students coming to the US, and the numbers are growing 3% annually. We are asking for $300,000 as initial capital investment for infrastructure and developing partners in India and the US. For our expansion in year 3, we require more 100,000. We break even with 11,000 students, and 88% of our revenue come from reselling our services. Student Globe turns cash flow positive by year 2 and has more than 5 million in revenue and 2 million in EBITDA by year 5. We have a cost advantage since most of our operations are based in India. Our management team has the required knowledge and experience of the complex Indian market. I, the CEO, have managed companies with revenues worth $600,000. Dhaval, with a master's in marketing, would take care of our sales and marketing. Saurabh, our technical guru, with a degree in computer science and experience in internet architecture and database management, would lead us on the technical front. Most importantly, we know how it feels like to say goodbye and go off to a new venture. Therefore, Student Globe meets a real market need and has the commitment and skills to make student transition easier and more affordable. Thank you.
Okay, thank you. Great presentations, and as I said, it's been a pleasure to have each of the students in one of my classes over the years. What I'm going to do is, without a drum roll, is announce the third place, second place, and first place winners, and then ask the judging panel and panelists to just introduce themselves. We'll go down the roll from Somak, Sabrina, Michael, and Mumtaz to just a little bit about themselves and their organization, and then just some general feedback on those plans. Again, it's like a living case, and then I'll ask some general questions as a moderator. And what we're going to do is take the photographs of everybody with their certificates afterwards. So, if I could have a hand in third place, Katie Osan, between courses. Second place, Student Globe, the team led by Rohit. And first place, I wish that I could tell you there'd be a bunch of Kone Chibos on the back, but next year, the household name, Kone Chibo Michael Bonavita. Before I turn over, if I could ask, and myself included, a round for the panel, not just for being here, but for reading a bunch of, these were just the finalists, but for reading a bunch of 40-page business plans and voting on them.
Sure. My name is Somak Chattopadhyay, and I'm, as Bruce mentioned, a vice president at Greenhill SAVP. We're an early stage venture capital fund affiliated with Greenhill and Company, which is a publicly traded investment bank. We actively focus on partnering with entrepreneurs to build great companies with a strong focus on companies here in the New York area. Often our sectors that we focus on are information services, software, technology companies, but generally that have a B2B model. Companies that are capital efficient, raising anywhere from a few $100,000 to $5 million. And I've been personally involved as an investor, entrepreneur, and advisor in this region for about 10 years.
I'm Sabrina Horn, the president and founder of the Horn Group. We're an 18-year-old public relations and digital communications agency. We provide PR, social media, and website services to technology companies. We, in fact, happen to represent now two of Greenhill's companies, courtesy of Somak. And we help young companies, really specializing in startups and emerging growth companies that are venture-backed, to figure out what it is they want to say to the market, how they're going to say it, and then getting it out there through every stage of their growth. We are in San Francisco and New York, 10 million in billings. We're a mid-sized firm, and we have partnerships with other agencies overseas.
My name is Michael Gotchman, founder and president of Gotchman Group, which is a commercial real estate company, full service. We do brokerage, leasing, retail, investment sales brokerage. We invest directly in real estate. We do direct development, third-party development, structured finance, joint venture investing, and we focus primarily on New York City and the tri-state area, but we do business nationally and internationally. That's it.
Well, my name is Mumtaz Alvi. I'm a founder of law firm Alvi and Alliance. I've been practicing law for 25 years, and we help all sort of companies, small and medium-sized companies, to form new companies and do all their legal work, drafting agreements, contracts, litigation. So we are a full-service law firm. Thank you.
Thank you. And that was a panel and assembled it specifically to try to cover as many areas that as possible relate to a new firm. And as Sabrina mentioned, Somak funded several of the companies. So, you know, he's a real VC with real money. There's a lot of VCs out there. Not a lot of them have money these days. But if I could ask them to give first just some general thoughts on the three companies that you just saw present as it relates to their area. For instance, they might be young right now for a venture capital investment, but some thoughts on what it might take to prepare that, et cetera. Sabrina will speak on marketing. Mike might talk about, you know, some of the real estate or build out considerations for the three, and then Mumtaz some of the legal concerns, maybe intellectual property protection for a brand name, contracts, not complete close, etc. So again, just some general comments so that the audience gets an idea of the three plans we just saw, what would be some of the considerations.
Sure. Do you want me to just talk about all three companies right now, or just a few?
Or
just
you're welcome to talk about one that most relates to your field, whichever you'd like.
Oh, sure. Sure. Well, just just some general comments. I think the presentations were really good in terms of hitting some of the key concerns that an investor wants to hear about in initial elevator pitch. Talking about the market size, talking a little bit about the competition, use of proceeds. I think some presentations did a better job than others in talking about where the money that we'd be putting into the company, what will actually be used in terms of use of proceeds. In terms of just some other overarching just comments about the companies. One of the things that is really important to us as an early stage investor is not just the size of the overall market. So for example, between courses mentioned that the restaurant industry is $550 billion. That might be the aggregate market size, but what's actually the addressable market within the $550 billion? For example, if you just focused on Westchester and Fairfield, how big is that market? If you look at the $550 billion that's generated through the restaurant industry, how much of that's spent on consulting and information services and technology? As you start slicing and dicing those numbers, it still has to make sense to us that this is going to be a big enough market. And from an early stage venture fund, typically a market size that's less than a few hundred million, generally tends a little bit more towards $1 billion, is not as exciting because given the amount of risk we're taking and the amount of failure that happens at companies at this stage, we need to make sure that there is stability to have outsized returns. So that was a concern I had about, or just general feedback about between courses. For Conchibo, I think the idea is really interesting, and just one question I think we would have, although we don't invest in these type of businesses, although we would look at something that's more of a software technologies company in that industry, is what's truly proprietary besides your recipe, and is it distribution? How are the current economic conditions affecting your ability to launch in an environment like this? I'll end with Students Club, which is probably the closest to a company that we would seek to back in terms of the space that it's in. And I think one thing that we would like to learn a little bit more about if we were looking at this company, can you hear me, is first of all, what's the revenue model? It seems that there's a lead gen component of basically trying to find all these students in India, China, and Korea. The question is from us, and this may be for you guys, venture may not be the best target for you, but a company that grows $5 million in 5 years' time is maybe for us not big enough in terms of the growth. And also just a little understanding about the 300,000, what are the use of proceeds, and how much of the company are you getting, what's the exit, things like that. I hope that's helpful.
Okay. So, all right, general comments and then specific comments. I thought all three of the plans were very well organized and thought through. I thought all three were, because I'm on the marketing side of things, a little light on marketing strategy and the power of what marketing can do to create more leads as a lead generation tool. One of the things I always look at when I look at a company in terms of one that we would want to represent is, I don't really care so much about how you're describing who you are. I care more about how you describe how you're different. And I wish that these plans had more of that descriptor or even passion or sentiment in them. And you know, I always think, as a business owner myself, I always think about what could kill me tomorrow. And this economy certainly could kill a small company and keep one from getting off the ground. So I guess I would have looked for more descriptions about challenges that are unforeseen, like hope for the best, plan for the worst, put those in your plan. And so I guess on a specific level, Students Globe, great concept. I'm not quite sure I understand your business model. Maybe I didn't get it, but it wasn't very explicit in your plan. And I don't see how it's all that scalable or what the return on investment might be, but awesome concept. Between courses, I think it's awesome. There's so many really bad restaurants out there, but by the time they realize that they need help, those privately owned restaurants probably don't have the money left to pay for the service. So I'm not sure how that is scalable. And forgive me for my pronunciation, Konechibo is awesome. I think I'm not quite sure if a distribution model was in the realm of possibilities, but distributing your concept on a larger scale, I think, could be a really great idea. I think you're a little bit putting yourself out there too much by saying that you're going to be a household name at this stage. From a marketing standpoint, that's a little too much bravado. But I do think you have an awesome concept, and I did vote for you for first place.
Okay. Again, I'd also like to say I think that it's clear that you all put a lot of work and effort into these business plans, and they're all great. They all communicate very well. And of course, it's easy for somebody to look in from the outside and critique, and hopefully you'll take the criticism as positive and something that will be helpful in retooling what you've already done and going out and attracting the investment capital that you're looking for. But it's just speaking in general terms, two of the companies clearly struck me as being scalable. And I think, again, any investor that's looking for, especially at these early stages, are looking for big returns, as Somak said, and they want to see big scalability. How are you going to make this small company into a big company? Students Globe is almost unlimited in terms of its scalability. Kona Chibo also, but higher barriers of entry in terms of finding the right locations, and the whole real estate part of your business is probably a little more difficult than you might think. And being at the right location, a half a block away, or around the corner on the side street, or the north side or the south side or the east, it's all going to make a difference, and you need to understand that part of it too. Between courses, also a great idea. I think there are a lot of restaurants out there that could use your help. Not a scalable business model, but certainly very kind of sustainable, and I could see a good cash flowing business. I didn't understand how you were going to penetrate what seemed like a very saturated market with other consultants, competitors, but that may need to be developed further. And again, all this criticism is intended for you to sort of restructure the business plans, and it's not uncommon for you to go back and rewrite your plans 2, 3, 4 times every time you present them. It's not, it's normal, you know, it's so by after the 10th pitch, you know, you really have something that you can go in on your 11th pitch and you sell it. So again, the students globe. I love the social, political aspect of it. I think it's the type of business that can attract serious, major global sponsors. You mentioned HSBC in your business plan. A lot of big telecom companies. Traveling is a very anxious experience for anybody. So I can see, and the price points entering for your end user also, I think, is very attractive. Everybody was, and I'll just say, everybody was underestimating their startup costs in terms of housing and office, but maybe we'll get more into that later. And that's pretty much it. Konachiba, I can see you sort of also partnering with local farmers and working the organic angle, and certainly you were all utilizing the website, which I think in this day and age is a very inexpensive marketing tool to take advantage of. But great job, all of you.
Well, I must say, you know, a lot of hard work was done with all of these 3 business plans. My comments will be from a legal perspective. And I think all these 3 plans should have some kind of mention there that you're going to have your trademark registered. That will be a good incentive or maybe attraction to investors, you know. So I think that is a good idea. As to the student globe, there should have been some kind of a non-disclosure clause. I don't see it here. That would help because this way whoever reads it will not disclose the contents of this plan to anybody. So from legal perspective, that will protect you. As to the business between courses, you have a legal budget of $1,000, which I think is very low. You should have normally around $5,000 so that you can cover your legal cost. Same thing applies to the Konachiba. You have given legal expenses 0. So I don't know how you can start business with 0 legal expenses. So I mean, there should be at least $5,000, you know, legal budget. Maybe less, but that should be the ballpark. So that's it. Good luck.
Bruce, if I may, there's one other thing I wanted to add.
Please.
What I also would like to have seen in all of these plans was an exit strategy, which also would have set up an opportunity to show some return analysis, you know, and I would have liked to have seen that in the executive summary. What am I buying into? What am I getting for my money? And again, I think the return analysis and an exit strategy absolutely has to be a part of your business plan to any business.
And that's a common misconception of leaving off an exit strategy. People think, well, I just want to run this business forever. I want to pass it down to my children. That's all fine, but if you're looking for investors want to get out and make their money. So an exit strategy is important. And I think the advice was very good. Many things that I've said, and sometimes it's easier to listen to it from a professional than a professor, though I would hope a professor is professional. And one, my background is actually in the field as opposed to academia. But one thing I like to say, a French philosopher, Solon, said, when in giving advice, seek to help, not please your friend. So take the criticism. And I also like to quote Guy Kawasaki, whose advice when you're being given feedback is shut up, take notes, and regurgitate. So it is very important. It's hard to take criticism. Your immediate reaction is to be defensive or to try to explain, but it is important to sit down and take it in. So I hope that was enlightening, not just to the 3 finalists, but to the audience as well, to hear from some companies you just saw presented. And the executive summaries are available in the yellow package, the program that was distributed. Now I thought what we'll do is I'll ask a couple of questions of the panelists, and then we'll leave time for the audience to ask questions. And the audience is welcome to ask questions of the panel and of the finalists. I thought for a first question, and especially because a few people mentioned it, a few of the panelists mentioned it, which was the budget items, the projection. You know, one of the difficulties in preparing a plan is to realistically estimate costs of doing business. Like everything takes twice as long and costs twice as much at least. And you know, things like these projections are conservative, don't exactly hold water. And I was wondering if each of the panelists could perhaps give some broad guidelines or generalizations on how an entrepreneur might budget for what should go in the plan. As mentioned in legal, you know, having at least 5,000. I'd imagine if you have something where you have to protect a brand and sign a lot of contracts, for example, if Michael was going to franchise this, the legal budget would be significantly higher. You know, on one of the things I face on like property from Michael, leasing, you could go in the New York Times, and every day you could see places available for $10, $20 a square foot, or on Madison Avenue in the 60s for $900 a square foot. So what are some of the things they should look at, and perhaps some things on build out? And Sabrina, on marketing, building a brand, it would be great to have a household name, even if it's an incredible project, you know, an incredible product. You know, people don't just beat a path to your door. You know, the old cliche, if you build a better mousetrap, the world will beat a path to your door is in the case. What does it really take to build a brand in terms of time and money, you know, let alone a household brand? And lastly, maybe Somak could talk about how when he looks at these plans, he tries to weigh how valid the assumptions and the financial side of the plan are. So shall we start with Mumtaz, any other thoughts on legal, on guidelines? And for example, what should budget for, you know, contracts or intellectual property protection? And this is not for just the 3 plans, but for everyone. For example, if you had to patent something, if you had a lot of employees. But how does someone, you know, in the audience who's thinking about starting a plan, what rough guidelines might you provide for what they should budget for legal costs? And again, not for the 3 plans, but in general.
Actually, it's a very general question. It all depends exactly how big the company is. Like you mentioned before, if it's going to be, they're going to franchise it out, or it's going to be like many employees, there's going to be employment contracts, there's going to be vendors contracts, you have to sign a lease, the lawyer has to negotiate with the landlord's attorney. So all these things, once you work on these things, the legal cost, you know, builds up, and it can be like, for example, Chibo, depending if you're opening up 2, 3 restaurants, I think the cost can be, even getting registration of trademark and everything, can be $10,000, can be $15,000. You know, it can go that high, sometimes even higher.
And for other, again, people that might be thinking of a business, any guidelines, like if you're doing, you know, there's non-compete clauses, patents, just general contract law for employees, product liability, or is it just, it's just too hard to come up with generalizations in that area?
Well, what I can suggest is once you're starting, let's talk about Chibo. I mean, for example, you're starting, for example, you know, when you're starting a business, what you have to do is, first of all, you have to get the name search done in the New York State to see if the name is available to form a corporation. Okay, maybe name is taken. You know, if name is not taken, then you're going to form a corporation, because corporation is a legal entity, and it's going to shield you personally from any kind of liabilities. So that's the first step you take when you start a business. And after that, you will have to get your trademark registered with the Patent and Trademark Office in Washington, D.C. Again, the same process. You have to have a name search done first. If the name is taken, or if the name is available, then that process can take easily 3 to 6 months. So those are the initial things, one has to be careful. Then, of course, like I said, you will have a lease, which you have to make sure any legal document which you sign, it has to be reviewed by a lawyer so that you're protected. And it should be not in your personal name. It should be in the name of your corporation. So that if you sign it personally, then you're personally liable. So, for example, in New York, the best thing is LLC, which is a limited liability company. You form that, and you're shielded from personal liability, except taxes. If the corporation does not pay taxes, you can be personally liable for that.
Okay. Good. And those things, a lot of times when entrepreneurs are first starting, they're very, wide-eyed and optimistic, and they see a space for lease, and afraid if they don't sign it right away, it may be gone. And I remember signing a lease and didn't realize I then had to bring it up to code, which meant replacing 5/8 inch sheetrock with 3/4 inch sheetrock, and putting in emergency exit signs and handicap accessible bathrooms and everything else. And that brings us to Michael. What are some of the general? Are there some guidelines for build out, for leasing, triple net, some of the things to watch out for, and how, when you're doing your plan, should you budget for not only the lease, but perhaps for some of the things that go with the real property, the real estate?
Well, I'll throw out some rough numbers just, for the purposes of setting up a budget. But it also relates to what Mumtaz is saying, and the general idea is that it's, make sure that you have allocated and sourced the right amount of money for what you need, and don't find yourself in a position where you've run out of money and you haven't even got your business off the ground yet. And any sophisticated investor that's going to invest in a company like this is going to know what things cost. So you're not going to fool them by trying to make it look less expensive than it really is. So you want to make sure that the money is there. You want to make sure you have the right lawyers doing the right thing. I know that in Kona Chibo, there was zero for legal, and I know that one of the partners was a lawyer, and that's great. And he can act as a general counsel, but he's probably not necessarily a real estate specialist. He's not necessarily a corporate specialist. He's not necessarily a construction specialist. So you want to make sure that you really allocate this. So 5,000 is at the absolute minimum, and probably closer to 25, 30, 40, 50,000 before you're and no investor's going to look at that and blink, because they know that's what that costs. But if you're planning on opening up in Lower Manhattan today, you're going to be spending on a per square foot basis $30 to $50 a square foot, then you got to build it. It's going to cost about $100 a foot, depending on the size of the space. On top of that $100 of construction, you've got about another 15 or 20% of soft costs involving architects, engineers, project managers, building permits. I mean, this is what's required. In terms of figuring out how much office space you need, a rule of thumb in the industry is 200 square feet per person, and that includes offices, conference rooms you may need, and circulation. In Midtown, all of those prices are about the same, except for the rent levels will jump 50 to 100% of what I just quoted, 30 to 50. In the suburbs, maybe you're at 15 to 20% below Lower Manhattan rates in terms of rental, but construction is going to be more or less about the same. Legal fees, are all going to be more or less about the same. You do need a lawyer to represent you in the lease. You don't want to go down the road and find out that you try to save some money up front and a very important clause was not, addressed, and you weren't well protected, and it'll cost you a lot more money than you thought you were saving in the beginning. Security deposit. The landlord wants a security deposit. That could be anywhere from 4 to 12 months. And any new startup is going to probably be on the higher end of that. But there is ways around these initial capital expenditures. There are executive suites, businesses out there on all different price levels. They completely outfit the space for you. You can rent from 3 months to 12 months. So you have flexibility to grow. At some point, you will reach a threshold where your size will no longer be economically, it won't make sense economically to stay in that environment. But as a startup, paying by the month, You know, I haven't even mentioned phones, furniture, servers, telecom equipment, supplemental AC. So these are all extra things that you need to set up, whereas if you go to an executive suites or a service office space, that's all there for you. You literally walk in with your computer, and you're given a phone number, and you're given internet access and server space, and you go to work. It's just, again, it's a short-term solution, not a long-term solution.
So in terms of marketing and building a brand, I'll start with price point stuff. So marketing is lots of different things. I run basically a PR and a website firm, so I can speak to that corner of the world. But you have to think about marketing much more holistic. PR is a great bang for your buck when you're a startup. Advertising is old generation. Print advertising, forget it. Don't go there. But PR, whether it's stories in magazines or newspapers, is fantastic promotion for whatever venture that you're in. But it's really all about social media these days. And it depends on how viral your business proposition is. So a wonderful new food, right, in a restaurant that people can like write about, and all of a sudden it becomes a phenomenon, like that's your PR. It costs you nothing, right? You do need to have a strategy and a thought plan behind it, and a nice place where people can go to write comments, but it costs you nothing. A business consulting service, like between courses, you're playing a lot of inside baseball, you're talking about a very small community, you're talking about going to Chamber of Commerce meetings, and maybe enticing a few people here and there, and once they've figured out that they've got you, they don't want their competition down the street to have you either. So you have to, that's a whole different marketing game. And Students Globe, again, super social networking opportunity, could be really viral, but I think in your plan, you just need to blow that out a lot more. Like, what is your strategy for that? And getting articles. You don't want to buy ads in the college newspapers in those countries. You want to get the editor to write a story about a place with your website URL to go to find out more about you. So don't pay for it. You know, talk to people and get them to write stories for you, which is my business. So for pricing, you want to hire an agency like my company, you're talking $10,000 to $15,000 a month. If you want to hire one of these bigger agencies that are intergalactic, global, what have you, upwards of $20,000 a month. Or you can hire a mom and pop shop. There hopefully will be more experts in your particular field. That's still going to be about $5,000 to $7,000 a month. You're probably better off going with a freelancer who really knows the handful or two handfuls of people that you need to talk to, make introductions for you, do a 3 to 6 month project, pay by the hour, and it's much more cost effective. So in terms of how to budget for building a brand, like, you have to first assess what kind of business that you are and how viral you could potentially be and how much social media can help you. But you also just really have to figure out, like, what do you want to get out of it? Like, if you want one review in the New York Times, job done. If you need to get a couple of articles in the local business journals, that may take you more effort. And so that all adds up into hours, and hours add up to a budget.
No, and we don't have a big advertising budget. We use social media. I was going to point to, there was an event that we had here just last week on the collective wisdom of startups, or the wisdom of crowds. And I thought it was interesting is they have this live Twitter feed. So people from not only in the audience, everyone's sitting with their, the smartphones, et cetera, but people from around the country would follow this event and ask questions over Twitter. It would show up and they'd be following it. And we've had other events. I mentioned to Sabrina and someone they're working with, but the book Groundswell is a great book about the Web 2.0 social media, and even the president of Faith has asked me on a number of occasions, how can we harness that for here at Pace? So it's a powerful, powerful tool. And Somak, how about when you're looking at a plan? What are those red flags? Or I imagine if the numbers are off, you may discount the whole plan if something doesn't look realistic. So looking at so many different plans in so many different industries by so many different entrepreneurs, any insight on what kind of guidelines you use when assessing the financial part of the plan?
Let me answer maybe in two parts. First part, just broadly, what are some of the major things that we look at? If you look at venture funds at our stage, and as Bruce mentioned, there's not too many of us that are actually actively investing in early stage. And we are actually doing some seed stage investments. We've got one company already in our portfolio. We've got 12 investments that was pre-revenue, really at the plan stage. But it's really hard for us. The problem is not having enough plans to read. We read about 2,000 to 3,000 a year and meet with some fraction of those to pursue as investments. The hard part is separating the wheat from the chaff. And so for us, there's some basic high-level parameters we use to do that. I mentioned a few of them earlier on: market size, competition. Really, is there something that's unique from a technology, from proprietary relationships, from data or information? Also, in terms of understanding management, ultimately, even if a company has a little bit of revenue, we're still taking the biggest part of our bet is on the entrepreneur. And so why is this particular entrepreneur best suited for this particular opportunity? What are the gaps that they may be seeking to fill post-funding? So those are some of the things that we look at a high level. And there's some numerical metrics we use in some of these things, but other things are a little bit more arbitrary and more of an art rather than a science. We place a tremendous amount of value on warm introductions from people like the people I have here on the panel with me today, people who are trusted advisors that have experienced growing businesses and who we trust in our network. So in terms of looking at the financial part of the business and understanding whether the cost makes sense, I think there's diminishing returns, and we've all found this internally, about spending too much time and energy employing all the things that you've learned in business school. Doing Black-Scholes or Monte Carlo simulations really doesn't make any sense for a company that has very limited historicals, and where ultimately there's a lot of conjecture. These are nascent, emerging markets. So really, it's not so much looking at the specific numbers that you present us, more than the methodology that you use to understand what the revenue drivers are and what the cost drivers are. So for example, if you're a very labor-intensive company where you're mostly consulting, if you start showing us gross margins of 90% or higher, that's hard to imagine because in general that's not the case. Generally, those type of margins are more common in, say, a software and services where there's very, very little cost of goods sold. But we also look at, as some of the people mentioned here, we also have a fairly good idea of what the cost structure is for companies at our stage. And some of them you can get from, again, some of my trusted advisor colleagues here on the stage in terms of real estate. Personnel generally is pretty common. Like in general, if you know that you need to hire a VP of marketing or a CFO at our stage before they're raising venture, there's some pretty common market rates for that. So really it's looking at the revenue drivers and the cost drivers at a unit economic basis, and then seeing, okay, let's try to tweak this. Let's say instead of if you're trying to hit restaurants, and you're trying to be a consulting business, if instead of the first year you did, only half of what you did, would you still be able to survive? Would you still be able to have 12 to 18 months of cash flow if something were to go awry or if this economic situation continues to worsen? So that's a little bit about it. And then in terms of just one other thing I want to mention is, as one of my colleagues mentioned, is the return. So for an investor at our stage, we look at a few things. One is return on capital, and the other thing is IRR. Return on capital is more important for us and our investors. So general, in any venture stage investment, you typically, if you don't have at least a high probability of a 10 to 20x return on investment, again, it's hard for us to make that justification to consider the investment because, again, the majority of companies, especially at the seed stage, fail.
Great, thank you. If I could, and I'm going to hold back on my questions and leave time for the audience to ask questions, but let me just ask, one other question of the panel, if I could, and then we'll open it up to the audience. It's just, if I could, what are some of the common mistakes and common misconceptions that entrepreneurs make either in their business plans that you reviewed, or people that you might talk to, as a mentor, or just, things that you've come across in your respective fields that people here might at least know to spend more time looking into. But as a very general question, the very common either mistakes or misconceptions about your field. And we could start with Mumtaz. Someone pointed out that when we talk about real estate and law, we have this conception that we should try to do a real estate closing without a lawyer, or try to get that down to $500, $1,000, whatever. But yet we pay a real estate broker 6%. So you buy a house for several $100,000. You don't think anything of paying a broker, $60,000, $70,000, $80,000. But the lawyer was really protecting your investment and looking out for you and your terms and everything else. We just want to minimize that or avoid it if legally possible. So that's just an example from day-to-day life, but I'm wondering, those common mistakes, common misconceptions that you see, that you would perhaps advise people to consider carefully.
Well, thank you, Bruce. I think you have rightly said. In my experience, what I have seen over the years, that when the client comes to me and he says, look, I signed this lease 3 years ago, and I said, did your lawyer review this lease? He says, no, my good friend did it, and he has, he went to law school for 2 years, and he reviewed it, and I want to sign this lease because my business is not doing well. Can I do it? I look at the lease and I said, well, you cannot do that because there's no assignment clause in the lease, Or he says, can I cancel the lease? I said, you cannot do it because there's no exit clause in the lease, I mean, my advice to anybody who is doing business, make sure that when you sign a document, it's a legal binding contract, okay? And if it's a legal binding contract, it must be reviewed by your lawyer you trust, so that when there's some eventuality comes, or litigation, anything, that you are covered, to the best, ability of your lawyer. He should cover whatever you want him to be covered in the contract. Same thing I have seen recently. A client came to me who was running a medium-sized business, and he hired a salesman from Texas to sell his jewelry, all over, to bring clients, from different places. And he signed a contract, and this salesman, he drafted the contract, and he told this guy, the employer, why don't you sign it for me? And he is bound to give him $100,000 every 3 months for the next 5 years, whether he brings business or not, but he will do his best, I said, who will do this? He said, no, I spoke to my father. He says, don't worry about it. He's a nice guy. So it is crucial. People are nice. They're very nice. But you must have any contract you sign, whether it's a lease, employment contract, anything you do in life, make sure it's reviewed by a lawyer. Like, Bruce said, if you're buying a house, for, let's say, $500,000, and if you hire a lawyer, maybe he'll charge you maybe $2,000 or $2,500. So your investment is secure. And he covers everything what needs to be covered in that contract. So my advice is that make sure that any contract you sign, it is reviewed by a lawyer.
Good, thank you. Mike, what are some good stories?
Well, lots of mistakes that we all make and continue to make, even the veteran managers. But I'll just take one point and illustrate it with one story about trying not to get too far ahead of yourself too quickly. I had a friend who had founded a .com B2C business. He was selling auto parts over the internet. It was called expressautoparts.com. He was doing very well. He'd been raising money for friends and family. which is not a bad way to raise money, by the way, in the beginning. And he got to a point where there was some serious interest from venture money. A famous venture capitalist by the name of Thomas H. Lee was looking at his company and was prepared to put in somewhere between 20 to 25 million. My friend started to look at office space. He was ready to jump out and lease 20,000 square feet and started, ramping up to employ the people that he needed. And he really thought this deal was going to happen. Now, this was around 2001, maybe the beginning of 2002. The dot-com market imploded, and Thomas H. Lee and all the other venture capitalists at the time took a step back, didn't get his funding. He was extremely depressed about the situation. But what happened was he was never able to go and lease that space. Other companies who had been funded by venture capital firms, given the 10, 15, 20, $30 million, went out, leased space, hired people, and they all got crushed. They all went out of business. My friend, he didn't know it at the time, it actually worked in his favor, because he then retrenched, he hadn't overcommitted, and he stayed in business, for another 5 or 6 years. Has since been out of business, but for different reasons. But all the other companies that had gotten this great financing that they were so happy about just ran out of money very quickly, and then the story was over very fast.
Okay, so I guess you guys have given me good ideas, but I have to agree with your comments about having a good attorney and protecting your backside. Like, are you a sole proprietorship? Are you an LLC? Do you want to be an S Corp or a C Corp? Why? Why would you do one or the other? What are the tax implications? What security do you have as an individual? How many other partners do you have? And protecting yourself and your partners. And having a good lawyer help you navigate through that. The other thing is what I call exception management. So it's not so much what you know, it's what you don't know. It's not what people are telling you, it's what they're not telling you. And it's not what you read, it's what's between the lines. So you have to always think about what's missing from this picture. How can I really think things through so that if the worst happens, I'm prepared, because it could happen. And the other is that when you really are very successful and you're at the top of your game and you're going to the moon, that's when you should be preparing to keep yourself from going to the bottom. Because when you're at the bottom, it's really hard to come back up, and you take it for granted. So easier said than done, but always be thinking, when you're at the top, things may not stay at the top, and to have strategies for that. And I guess I would finally say that it's really all about your passion to the commitment. So it can be sort of sexy and glamorous to have your own business, and maybe someday you can sit on a panel like this and give advice to people, but it's extremely hard work. It is an obsession to be successful. For anyone to commit any kind of money in your company, or for any person to want to come work for you and believe in your vision, requires almost 24/7 passion and commitment. And if you don't have that, and you just think, you're gonna do something really quick and then get out, don't waste your time. So after 18 years, I can honestly say it really has to be your life's work. And unfortunately, other things in your life sometimes have to take a back seat in order to be a successful entrepreneur. Except for you.
So I think everyone here has stolen some of my thunder, so I'll be very brief. In terms of just things about venture capital I think there's a lot of, there's a lack of clarity often about what we do. Are we actually bringing value? Are we here to sort of pillage every company that we get involved with? Or are we really partnering with entrepreneurs? And I think that those, there's no way you can survive in this venture industry and raise multiple funds unless you have a track record, not only of building companies and building wealth for your investors, but also partnering with entrepreneurs and getting their trust. So I think that that's important, that you guys do your diligence of who you work with and also the individuals you're working with in any fund that you work with. I thought one comment actually that I really liked earlier, I liked all these comments, but Michael was talking about capital efficiency. That really resonates very strongly with us, because if you look at venture funds that were raised at the height of the bubble, if some of you guys were working back then, this was back in the late 90s, we did just a cursory scan of that in preparation for an annual meeting we have 2 weeks from now, and I think we were among maybe 2 or 3 funds that are still around today. And while we'd like to think we were geniuses and we just had great foresight in companies that we backed, obviously there's a huge element of luck in our business. But the other thing was the issue was too much capital. Too many companies raise too much capital, and often that then gives you very limited foresight in terms of how to use that effectively. So an example that I didn't talk about earlier, something about just issues that we have sometimes with entrepreneurs, is valuation. Of course, because your whole net worth is often involved with a particular company, you almost might feel slighted when a certain investor may give you a price for what they think this is worth. However, you've got to think about, just statistically speaking, again, the majority of companies do fail at the seed stage. And even if you are successful enough to raise, or lucky enough to raise venture capital, we've done our analysis that shows, and other funds have showed this as well, that the majority of companies, if they do get sold, is often well under $100 million. So if you are expecting to be priced at, say, $20, $30 million, and nobody did today, but there are many entrepreneurs who think that they can price their companies that way, and you're thinking you can raise another 10, 20 million, so say you're 50 million. In order for you to generate a 10x return, you have to sell at $500 million, just say, to estimate. There's almost no companies. There's maybe a handful that get sold at that price, and if you look at the last year, almost no one. So I think some of the things that I would just end with is just really, if you are going to go the venture track, is really understand, like Sabrina said, what are your reasons for doing this business? Are you looking for a lifestyle business? There's nothing wrong with that. In fact, the majority of companies are probably not best suited to, or well suited to venture capital. Are you okay creating your wealth as one of the largest shareholders of the company? Are you okay with potentially turning over the reins once your skill sets no longer match the needs of the company? Or do you want to always be leading the mantle? What kind of exit do you think is realistic? All of these things will greatly influence, A, if you want to pursue this venture, and B, whether it makes sense to raise venture capital.
Thank you. Thank you. Well, at this point, I'd like to open it up. We're scheduled to go till 7:30, so we have some time to questions from the audience. You get directed at a specific panelist or at one of the finalists. And I'll run over with the mic if I have to, otherwise we could practice voice projection. Yep?
This is for the attorney, Mr. Alvi. I'm an attorney as well, and I enjoy working with entrepreneurs and startups. My question is, as an attorney, how do you, what's a great way to evaluate someone who I want to represent? What's the best question for me to ask them? What should I be looking for as far as how far along they are? How should I sort of assess the clients I want to work with and bring on? What are some of the good questions or red flags or stuff I should ask them to think about? Can you speak on that?
Well, I think it's a very good question. The first thing really, in meeting with a client, you have to have a checklist where you want to find out exactly what the client is trying to achieve. For example, again, let's go to the Chibo restaurant. You need to find out how many restaurants they want to open up, how many employees they want to have, are they going to be, how many shareholders they're going to have. So again, other thing which I have not discussed is the shareholder agreement. That is very crucial. Make sure that every shareholder is fully protected in case at some point there's a divorce. The shareholders, they go on their way. So I mean, these are the things which you need to find out, and also need to find out that exactly how much money they intend to invest, and they have enough funds to do it from legal perspective. You have to check if they have previously, they have filed bankruptcy or they have done anything which can come back and hurt them, you know. I mean, the whole background check, you know, you have to speak to your client. And the client and attorney relationship is all based on trust, you know. So when you're satisfied with that, you can start the process. I hope that's clear.
Just like the Aaron and then if you could just introduce yourself as well.
My name is Aaron Mandelbaum, and thank you everybody for coming. Congratulations to the finalists. My question is, you spoke about what you would like to see on a plan, but is there anything you would see on a plan that would be an instant turnoff, that you would see a red flag that would just instantly make you go, what?
For me, that would be repetitiveness. And I'd like to see a succinct plan. And probably you're going to lose most people after the executive summary anyway if you don't get them right then and there. But then if you read on and it becomes just repetitive and repetitive, to me that's just it just gets boring, and maybe says something about the preparer.
Ego. Like over-exaggerated claims, it means that ultimately the emperor has no clothes. Forget it.
One thing that we, after reading so many different plans, get familiar to whether something turns us off is understanding, like, if the person within the first few paragraphs that we said, being succinct and is explaining and articulating what the ROI is there really a pain point? Is, some VCs say, is it a vitamin or an antibiotic? Is it a nice to have, or is it something that an industry really needs, isn't being served by the incumbents or any of the other potential new entrants? That's something that if we can't understand in the first page or two what this company's doing, and if there's a pain point, it's probably not good, not going to be, we're not going to spend much more time on it.
Well, I must say, the old common sense, if something looks good, too good to be true, that's it.
Thank you.
Nick Schiavo, Pace Alumnus. Question is to all the panelists. I'm sure you're asked to review many business plans. What is your viewpoint in terms of signing an NDA? Would you or would you not?
On a business plan?
Yes.
Yeah.
We're pretty, it's a categorical no, generally. We will never sign an NDA. And there's a lot of reasons for that. I'll be very brief. But the biggest reason is not because, again, we're here to take your idea and start running it. We're not in the business of operating our own companies. The issue is for us from a legal perspective, when we see 2,000 to 3,000 plans a year, and you compound, you multiply that by the 5 years that we're investing. Some of these NDAs are written in a way in which we even potentially get into an ancillary business where someone pursues a similar model and addresses a similar customer base that we would be infringing on, or on that NDA. And so for us, it's just simply not possible. In the private equity world, we have a sister PE fund. That's commonly done because, again, they're looking at maybe 12 to 15 plans a year, and it's unlikely that they would be ever investing in competitors. But in very specific circumstances, we might consider NDA where the IP is the key underlying issue, but then it's going to be our own NDA that's worded in a way in which we have minimal exposure.
Hi, first of all, I really enjoyed all your insights, and I'm trying to formulate a question in my head. Basically, how do I, as a 24-year-old entrepreneur with no experience, whether I'm trying to get funding or whether I'm trying to just pitch an idea to a business if it's a B2B play, how do I get my foot in the door? How do I get somebody to listen to what I have to offer with no track record?
Presented a business plan competition, you have a captive
That's-
audience.
That's a great question. I think Somak touched on it when he said that they like to get warm referrals, people who introduce them and have already been in effect vetted through the fact that they know some other colleague or professional in the business. And so, you know, I would probably just look to see who's in your network and you let those people know what your objectives are, because they don't always know. You may think they know, or they're not thinking of it, you know, at the top of their head, and ask them to help you out, introduce you to somebody. Also, there's nothing wrong with cold calling somebody. People appreciate that. Most people do anyway, especially if they're in a sales-oriented position.
I don't know if you can, given what your business idea is, but if you can bootstrap it yourself with your own cash for a while to sort of prove your worth, then the next step is easy.
Hi, my name is Alan Siege, and I'm interested in your response to the idea that right now we all know the economy is in a really tough, uncertain state. And here you have people proposing businesses in this time. What is the difference? I mean, what are you using now to evaluate them? I do a little teaching in this area myself, and the thing I say to people is you want to make sure that you're not perceived as a luxury, but you're seen as a necessity in some way. But how are you guys going to do that for this group? And what would you say to other people, I mean, right now, when we really don't know the outcome of where we're at in this time? How do you go about thinking about starting a business now? Stump the panel.
Now is the best time to start a business.
I agree.
Best time. And I think we've hit rock bottom. So I think as soon as you know that's happened, and I believe it has, now is the time to invest, now is the time for new ideas to germinate. And I firmly believe in that strategy. And I also think that innovation will never go away. As long as there are human beings, there will be innovation, and there will be entrepreneurs, and there will be people who find good ideas. And so really it's just the survival of the fittest, really, who has the best idea and who has the best strategy to execute it.
I'd also agree. I mean, it sounds like we're, being Pollyannas, but it really is a phenomenal time to start a business. And part of it is also your perspective in terms of your time horizon as an investor. But as venture investors, especially if you're early in your fund, we're looking at a 5-10 year period. And even if the market doesn't improve a year from now, if the company has a viable business model and can prove it out over the next few years, there's just some amazing things going on that make it very favorable for an entrepreneur, not the least of which is just the availability of talent. If you look at all these, if you, in any industry, whether it's financial services or media or healthcare or energy, there's, the old guard is struggling to find ways to make their existing models work. And anything that's truly disruptive and that has the opportunity to completely change the way things are going. There's these industries that are in pain, and a lot of startups that we've backed, at least a few of them, are actually growing because of the current economic conditions. So I think there are things that make this exciting to be an entrepreneur, and also a very exciting time to be an investor if you've got cash now.
Well, my view is, I'm sorry. Yeah, my view is better days are coming. Drill, baby, drill.
We have time for one last question, and then I know that everyone's going to want to network and speak to the panel, but what we're going to do is just afterwards we're going to take some pictures with the winners, and then there'll be plenty of time to network. So let me just present this for the last question.
So this question would be for Somak. How would one go about developing projections of sales or revenue when you have nothing to base your projections on?
When you say nothing, what do you mean? You mean like there's just no historical precedent, or?
Exactly. When it's a startup and you don't have any history in operation.
Yeah. So I mean, I was beginning to touch on that earlier. Is that, as I was saying, we're not as concerned about you having the exact right numbers. It's better when we look at a model, if you're sending us a spreadsheet, understanding what the drivers are of the revenue and cost. So, ultimately the market will prove out your model. So if you're selling software or doing lead generation or e-commerce or consulting, ultimately your customers are going to tell you what they're going to be willing to pay. There may be some precedent, so part of it is maybe doing some market research, talking to other entrepreneurs or people who've worked with entrepreneurs, but you'll get some general ranges. And then basically what's more important for us is to understand the nature of the revenue model. Is it subscription? Is it recurring? Is it transaction-based? Is it consulting, one time, or recurring? And then on the cost side, as I said earlier, and a few of my co-panelists alluded to, there's a lot of stuff that you actually can get that's available, and no matter what your industry is, in terms of the operating costs, real estate, legal, personnel costs. So part of it is, for that part, we may look at that and see, okay, well, how much experience does the person have? Has the person given some thought? Has it done their own research? But really what we'll do is we'll look at your model and we'll pretty much rip it apart, but we're just going to try to understand with the drivers that you've put in, is this a business that can scale? So the numbers itself aren't so important as just how you think the model will work for revenue and costs.
Okay, thank you. If we could have a hand for our panel.